Okay, think about this. What if that smartphone, the one basically attached to your hand, is actually on its way out? And at the same time, what if the whole foundation of your investment strategy is like shifting under your feet in a way we really haven't seen for decades?
It's a lot to think about.
Yeah. So today on the deep dive, we're really digging into two huge interconnected shifts, things that look set to redefine how we interact with the world and also how we should be thinking about our financial future.
Absolutely. We've gone through quite a pile of sources for you. There's a big financial outlook report from Rothschild & Co., a really interesting piece on investment strategies, especially looking at precious metals, and then detailed info on some emerging tech, smart glasses, advanced wireless charging, that kind of thing.
Right.
And our mission really is just to pull out the key stuff, the crucial insights, so you can actually stay ahead of these curves.
Okay, let's start with the tech then. There's this prediction. It sounds a bit sci-fi maybe, but it's coming from Mark Zuckerberg.
Yeah.
He's basically forecasting that within the next decade, smartphones, which, let's face it, have been totally indispensable for our generation, for millennials, they could be largely replaced by smart glasses.
Yeah, imagine that. Just digital information, texts, calls, news, maps, just layered right onto what you're seeing in the real world.
Without pulling out a phone.
Exactly, no phone. The whole idea is to get past the physical screen, make tech much more integrated, almost like invisible.
And it's not just some pie-in-the-sky dream, is it? You've got companies like Meta. I mean, they even renamed themselves with the metaverse in mind.
Right.
And Apple, with their big Vision Pro launch, they're pouring billions, actual billions, into AR, augmented reality, and AI, artificial intelligence, to make this happen.
Meta especially seems laser-focused on getting smart glasses mainstream. Onto everyone's faces, not just in their hands.
So what's the biggest hurdle for Meta, then? Why aren't we all wearing them now?
Well, yeah, the path hasn't exactly been smooth. Remember all that hype around the metaverse? That sort of collective 3D virtual space with avatars.
Oh, yeah, huge hype.
Huge hype. But the adoption, well, it's been pretty limited. Platforms like Decentraland, I think the numbers for 2023 showed fewer than, 8,000 daily users.
Wow, that's low.
It's really low.
Yeah.
And that, plus some pretty significant financial losses in their metaverse division, it actually led Zuckerberg to pivot Meta's main focus more towards AI earlier this year. It's a bit of a reality check.
It really was. And technically, there are still some pretty big challenges, right?
Oh, absolutely. You're talking about the cost of the headset still being high, the difficulty of getting really good graphics and, mobility into something lightweight and truly wireless.
Yeah, that's tough.
And then there's the whole issue of standards, getting everything to work together smoothly. It's a complex engineering puzzle.
Okay, but beyond the tech side, what about the counter-arguments, the worries?
Right, because there is a strong counter-narrative here.
Yeah.
Lots of real public and expert concerns, especially about smart glasses and this idea of AR being everywhere. People are raising some serious red flags.
Yeah, and probably for good reason. I mean, one of the biggest is health, isn't it?
Definitely. Concerns about radiation exposure right next to your eyes and brain. Potential impacts on eyesight from having screens so close all the time. And the electromagnetic fields, the EMFs, these things would give off.
It sounds a bit like those earlier warnings about holding your mobile phone too close, but maybe amplified. Critics are worried, citing, anecdotal links to health issues.
Exactly. Then you've got the practical stuff.
Yeah.
Like battery life. How do you power something you wear all day?
Right.
And comfort. Especially if you already wear prescription glasses. That's a hurdle.
Yeah.
But maybe more profoundly, there's the social side. The fear of people becoming, zombies.
Less aware.
Yeah. More accidents if digital stuff pops up while you're driving, or just less real-world human interaction. It can even make screen addiction way worse.
I can just picture trying to cross the road with notifications popping into my view. And privacy. I mean, for millennials who've seen privacy issues grow from social media to smart speakers, this feels like the next level up.
It really does. Critics are pointing to the potential for way more data collection than ever before. Even biometric data from wearables.
So imagine hyper-targeted ads inside your actual field of vision.
Exactly. And then there's that bigger sort of dystopian worry. The idea of a few powerful tech billionaires effectively controlling how we perceive reality through these digital layers.
It is a lot to think about.
It really is. And for you listening, especially if you're a millennial, These aren't just abstract debates, right? You grew up watching tech change at warp speed, from flip phones to smartphones. You've lived through these shifts.
Yeah, we adapted.
You adapted.
Right.
And now you're right at the forefront of what could be the next massive change in how we interact with everything. These developments, these choices, they'll directly shape your daily life.
Okay, so while tech might be changing our personal world, these things don't happen in isolation, do they? The same forces seem to be shaking up the global financial picture, too.
Precisely.
Let's pivot then. Let's look at what Rothschild & Co. are forecasting in their Consensus Outlook 2025. And it sounds like they're striking a much more cautious note this time.
Yeah, decidedly more cautious than maybe a year ago. That caution comes from a few connected things. We're looking at a global economy, global markets in 2025, being heavily shaped by policy changes, particularly from a new U.S. administration.
Like what specifically?
Like trade, immigration, fiscal policy, regulations, all that stuff. Plus, the business cycle itself is, well, getting older, and we're probably heading into a less friendly mix of growth and inflation. In fact, they flag rising inflation as the #1 risk.
And this is where it gets really interesting for investors. Those magnificent 7 tech stocks, Apple, Microsoft, Google, etc., which at one point were like 35% of the S&P 500. They're predicted to have relinquished their leadership position in 2025. That sounds like more than just a little adjustment.
Oh, it's way more profound than that. The key insight here is the market is rethinking what value even means. For years, especially 2020 to 2023, the playbook was all about growth, 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 fueled by super cheap money.
Right.
Now, with interest rates higher, squeezing those valuations, investors are really pivoting away from those tech giants that suddenly look, well, overvalued.
So the old playbook is broken.
That's what one strategist basically said. The playbook that worked from 2020 to 2023 is increasingly ineffective. It's not just a market rotation, it feels like a fundamental shift in economic gravity, potentially something lasting years.
Okay, so if tech isn't leading, what does this mean for your portfolio?
Well, we're seeing commodities really take center stage, especially precious metals, gold and silver.
Gold. Okay,
Yeah.
Why now? Is it just a safe haven thing, or is there more to it? You mentioned central banks earlier.
Exactly. It feels like a perfect storm for gold. First, worries about reciprocal tariffs messing up supply chains that makes tangible assets look good.
Makes sense.
Second, that big shift away from those pricey tech stocks we just talked about. Third, and this is fascinating, central banks are buying gold like crazy. Historic levels.
Why are they doing that?
They're diversifying their reserves, moving away from holding so many U.S. dollar assets. It's this trend people call de-dollarization. Basically, reducing reliance on the dollar amid all the global economic and geopolitical shifts.
Wow.
And finally, you've just got less new gold coming out of the ground, mining supply constraints, fewer big discoveries.
So if you're looking at your portfolio, what are the recommendations? How much gold?
Well, the suggestions are pretty significant now. Conservative models are talking 5-8% allocation to precious metals.
Okay.
More aggressive ones are up at 12-18%.
That's quite a chunk.
It is. And you've got choices. You can hold physical metal for direct exposure or invest in mining stocks. Mining stocks give you what's called operational leverage. Their profits can swing much more dramatically than the gold price itself. So potentially bigger returns if gold goes up significantly.
And gold is seen as a recession hedge too, right?
Yeah, historically it's done pretty well. Positive returns in 7 out of the last 8 U.S. recessions. Average gains of around 26% during those downturns. So it can be a powerful stabilizer in uncertain times.
Speaking of uncertainty, what about monetary policy? The Fed, they're talking about cutting rates in 2025.
Yeah, the Fed definitely has an easing bias, as there's like a 68% chance priced in for a rate cut by May 2025.
Yeah.
But it's complicated, especially with tariffs.
How do tariffs complicate things?
Well, tariffs are tricky. They push inflation up, right?
Yeah.
But they also slow down economic growth. It creates this weird hall of mirrors for the Fed.
Mm-hmm.
Makes the usual response like cutting rates to boost growth much harder. However, if we end up in a situation with continued low real interest rates, meaning nominal rates are below the inflation rate,
Which they have been.
which they often have been, that's actually a really good environment for precious metals. And that could last for years, not just months.
Okay, let's do a quick trip around the world. Investment-wise, the U.S.
U.S. exceptionalism is kind of expected to continue. Corporate earnings look pretty robust, so U.S. stocks are still generally favored.
Europe.
Europe's facing more challenges, political uncertainty, trade tensions, structural issues. So the consensus is generally underweight Eurozone stocks. The UK, maybe surprisingly, looks a bit better as an alternative.
Interesting. What about Japan?
Japan's actually a favored region. Consensus overweight on Japanese stocks. Reasons include strong earnings growth, the weak yen helping exporters, and ongoing corporate reforms there.
And emerging markets, you said it's mixed. Which ones stand out?
Exactly. It's a mixed bag. They're generally vulnerable to trade fights and a strong dollar. But specific places like Korea and Taiwan offer value. Their exports are pretty essential to global supply chains. Maybe less likely to get hit hard by tariffs because you can't easily substitute them.
Okay.
And India also has a strong domestic growth story happening, driven by its own internal economy.
So this really drives home the point. This isn't just a short-term blip in the market. We could be talking a multi-year shift in leadership.
Absolutely.
Yeah.
Commodity-led cycles, historically, they can last 7, 15 years sometimes.
Wow.
Which really underlines the need for, proper portfolio rebalancing. Diversification beyond just the usual stocks and bonds. Especially for listeners whose portfolios might still be heavily tilted towards those tech giants that will define their investing experience coming of age.
Okay, let's circle back then. Back to that vision of smart glasses, seamlessly part of our lives. For that to work, there's a fundamental problem. Power.
Right. How do you keep them charged?
Exactly. You can't be plugging them in all the time. And this is where this other tech, wireless power, specifically inductive charging, kind of becomes the unsung hero, the unseen enabler.
Right. Inductive charging. Basically using electromagnetic fields to send power wirelessly.
Yeah. I mean, think about it. No more messing with cables, no ports getting corroded or damaged. It makes devices more durable. It can even be safer for medical implants, no wires going through the skin. And for smart glasses, it's just convenient, right? Put them down on a pad, they charge.
It sounds great. But the current wireless charging, like for phones, it still has downsides, doesn't it?
It does. It's often a bit slower, maybe 15% slower than plugging in. It can cost more because you need the special coils and electronics in the device and the charger.
Right.
And usually your device is just stuck on the pad. You can't really use it while it's charging, but I hear things are improving fast.
And really are. Newer designs are using ultra-thin coils, higher frequencies, better electronics. They're getting charging times much closer to wired speeds now. And we're even seeing reverse wireless charging. Like your phone could charge your earbuds wirelessly.
Oh, cool.
So the tech is moving way beyond just a simple mat.
And the really big ambition is electric vehicles, right?
Yeah.
Charging your car wirelessly.
Yeah, two main ideas there. Stationary charging, like when you're parked in your garage or a parking spot.
Yeah.
But the really ambitious one is dynamic wireless charging, DWPT, charging the car while it's actually driving on the road.
Wow. Wireless roads.
That's the dream. Imagine special charging lanes that could, theoretically, give EVs unlimited range. People are actively researching this, running pilot projects.
But the hurdles must be huge.
Oh, massive. The cost to build that infrastructure is astronomical.
Yeah, I bet.
And how do you even track who uses how much power to build them? It's complex. Plus, dynamic charging isn't perfectly efficient. Systems can lose like 20–25% of the power, even for big trucks.
And safety must be a concern too. Heat, EMFs.
Absolutely. Heat between the charging surfaces is an issue. Concerns about EMFs from these big coils under the road. And you need really good systems to detect foreign objects FOD. Like if a piece of metal falls between the charger and the car, it could get super hot, maybe start a fire. We've seen challenges before, too. GM had a system called MagnaCharge years ago, but it got discontinued when California picked a different conductive standard for EVs. So standardization is still a big deal. But yeah, the potential is enormous.
And beyond just convenience tech and cars, wireless charging is making waves in medicine, too.
Yeah, quietly making a huge difference. It lets doctors charge implants and sensors long-term right under the skin.
Wow.
Which makes procedures for things like pacemakers potentially safer, less invasive. I even read about researchers literally printing wireless power antennas onto flexible materials you could potentially place under the skin. It's pretty incredible stuff.
So when you pull it all together, it's clear these aren't just separate trends happening on their own, are they?
Not at all. The tech shift, moving us beyond the phone, the massive economic shift, rewriting investment rules, and this underlying wireless power, tech enabling it all. They're all deeply connected forces. They're reshaping our world right now.
And these changes, they're going to redefine more than just tech and finance. They'll change our daily lives, how we work, maybe even our well-being. For a generation, for millennials who've already navigated so much change, the next few years look set to bring even more fundamental shifts.
So as our devices maybe become less visible, sort of fading into the background, and our investment landscape moves way beyond just those big tech names, how are you going to navigate those blurring lines? The lines between digital and physical?
Yeah, and what does being well-informed even mean anymore when the old playbooks are getting tossed out and new ones are basically being written live in real time? It's a fascinating challenge for sure, and something that needs, well, constant attention and adaptation from all of us.